I usually get a countdown to that. Don't know if that's working or not. Try again. Was it working? Must be working. Yeah. Right. So just been going through some of these pairs, and I've got dollar Swiss. I'm just adding to the watch list as a first red day. We'll go through these eventually one by one. Right, let me know as usual which ones you want me to look at. If there's any instruments, assets, products you want me to look at in particular. We'll start with the US dollar. And so, of note, look, we've farm payrolls tomorrow. That's not to say we can't see any action today, but I'm just wondering if we're not sort of setting up or settling ahead of the data tomorrow. We had the US data yesterday was not particularly um, in line with the hawkish narrative, right? We had ADP jobs data and the data as well, which should have been bearish for the US dollar overall. Um, and what we've seen as a consequence of that is look at yesterday's market sort of found resistance. So we broke out of Tuesday's highs, right? So we broke out of these highs, and we stayed below them, right? So that volume up there was trapped. So breakout, pull back, continuation, well, back in line with the breakout. We didn't make any new lows. We broke out, pulled back, and moved into consolidation. Now, what we saw was a W formation, so the breakout of that area over here. So that's the W, and this DXY hourly chart. We move back into the neckline, which is now acting as support. So, with non-farm payrolls tomorrow, we don't know what the outcome is going to be. It's an important data point, uh, very important. So, whether or not we're going to see a continuation or are we going to pull back inside is the question for today, right? So, correction, continuation back in line, which would be essentially printing a head and shoulders pattern, an inverse head and shoulders, left hand shoulder, head, right hand shoulder. So prospects of a move back up in the inside, perhaps. So impulse, correction, continuation, scenario one. Impulse, correction, consolidation down low ahead of tomorrow's data is scenario two. And impulse, correction, downside, continuation in line with the dominant trend. So impulse, correction, this continuing to correct could be a scenario as well. Impulse correction. So those are the three scenarios: up, stabilizing, or down. Now, ahead of tomorrow's data, I just wonder if if we're going to see much at all today. Um, Maybe markets are just in wait and see mode, sitting on hands. So starting to sort of favour this being a support area, perhaps a move up into shorts, dollar shorts, which would weigh on the euro, the indices, gold, if the dollar strengthens up a bit. So let's look at that. We'll look at the sterling yen that you've asked for and the Aussie. No worries, JR. All good. Glad that you're here. So let's look at the yields quickly. So we're down low on the session. We've got that move that we were looking for. We haven't broken. Well, we have actually. We've broken structure over here. So we've broken that. So the bias is bearish, which is a weight on the dollar. But are we now into support, and are we going to see a move up in line with bullish outlook for the dollar for the Wall Street Open? And here could be support. Support over here. This area there. That led to the surge to the upside. So let's see what happens here as well. Right, so we've got potential support in here, this area there. If that continues to act as support, then we can look for a move up in the dollar for the US Open. So impulse, correction, support, support the US dollar. If we break these lows, so we can mark them if you like, break that low there, then we'd be in anticipation of a continuation low down into last week's highs over here, potential support area. So for me, unless we break this support significantly, I think we're looking for a stronger dollar. If we can break the support, then lower dollar. If we can hold at support, upwards corrections in the US dollar. Okay, so that's the outlook for me for the dollar. If you can't see the screen, let me re-share it now. Bear with me. Right, so that's been reshared. You should be seeing that screen now. Pitmaker, if you can have a look, let me know. Otherwise, you'll need to log out and log back in. Okay, so let's go through the pairs you want to look at. So sterling yen. Um, so we saw that spike to the downside with the yen strengthening up on what was presumed to be Bank of Japan intervention. Nothing has been confirmed. The officials out of Japan have not wanted to comment one way or the other. They basically came out and said we're not prepared to comment on whether we intervened or not. And we won't get any information, I don't think, any hard data in terms of whether they did or not until November when they release. I was looking at something here by Brown Brothers Harriman, which are a financial institution, American institution. They give very good analysis, comprehensive analysis, and they talked about what was it? Let me have a look here. Um, yeah, they're saying the Bank of Japan's projections of its current account balances suggest it did not intervene in FX markets on Tuesday. When it intervened last September and October, some signs were apparently seen in the current account estimates. Now, the Bank of Japan reports its FX intervention on a monthly basis, so we won't see concrete evidence or lack thereof of the Bank of Japan action this week until early November. Anyway, regardless, there was the spike in the yen, so don't know what went on there yet. Um, but we've since recovered, which is typical of such a scenario. We're back into essentially where it where it dropped from sterling yen. So we're still below last week's ranges lows. So that was last week. We dropped strongly out of those lows. We've come back up in to retest the breakout. So breakout, pullback. So the market only does one of three things. It's either going to go sideways, it's going to come back into the range, and therefore probably continue higher, or it's going to find resistance and continue lower. Um, so at this point, I'd be watchful of these highs over here as potential resistance, and yesterday's highs as well. So we can take it off as a resistance area. So here we go, potential resistance area. Um, we're testing yesterday's closing price as a resistance as well. We're testing yet last week's lows, last month's lows. So I mean, we're in a very important area, aren't we? We've got last month's lows, last week's lows, yesterday's closing price, and highs of Wednesday. So all of this can be regarded as a resistance area. If we break through that resistance area, then that could be significant and lead to prospects of a continuation to the upside. For the downside, we want to see a break of, on this hourly time frame, these lows, which would cement the downside bias day ahead and tomorrow. So we're sort of trapped between resistance and support at the moment. We can move into the 15-minute chart and see if we've got any nearer term support, which I'd say we do. This sort of area in here. So if we break below that supporting area, we want to put a line in the sand. We could use the point of control over here, which aligns pretty much with this area here. So I'm just going to mark that off. That low there, the last low really came up, came down, settled a bit here, rallied. So I'd say 180.62 would be a key level. A break below there could open up the downside for the rest of the day. Aussie, looking at the Aussie now for Zeb out in Australia. Got the Aussie, actually I'll put this on the watch list. As a first green day. So after a series of lower days, so we're back out to this 3-day cycle template. So we had a high last week, failed, so rallied, failed, dropped. So day one, day two, day three. Yesterday was day two, is it day two continuation? So day one longs coming in, day two longs, got day three longs, right? But note that yesterday was the first day out of a series of down days to close positive. So the thesis is that once you get one of these corrective days, the following day you're looking to buy longs in line with the first day of corrections. So that's the first day of corrections. You're looking for a second day of corrections into the drop. So the bias for the Aussie is long to the upside. Now we're holding above last week's lows, yesterday's closing price. So all of this area here can be regarded as a supporting area. So while we're holding above that supporting area, we're looking to buy dips. Dips in the price to go long, squeezing into today's sell-off that started off in Frankfurt, London, right? And then the bulls came in late London, early New York. So buyers are engaged in the US session at the moment. We're selling off into those longs. So we're looking for it to stabilize and turn higher. All right. So that would be in line with a bearish US dollar thesis. So again, we need to keep an eye on this dollar, and we're looking therefore for the dollar to continue pummeling into this support area, and that would lift the Aussie. If it finds support, then you're going to expect the bullish thesis in the Aussie to flip back into the downside scenario to test yesterday's closing price. So, two scenarios there. I'll share my screen once again for I am Sean. So, right, so that's it being shared again. So let me know, I am Sean, if you can see that screen now, please. Great. Hopefully you can. So Zeb still can't see the screen. Same with me. I hope we can share the chart as a pic. Right. Well, look, I've got this record. I've got this being recorded. US 21 can see the screen. Um, right. Okay then, Zeb. No problem. Zeb, was it you that asked for the Aussie? So I'm just going to show you the screenshot in the chat so you can see the Aussie chart. And what I was saying there is that yesterday, the yellow bars from yesterday, yellow bars indicating that yesterday was a inside day, have come up to hit the stops of yesterday's inside day highs. But anyway, yesterday was the first green day as per arrows. So you've got two down arrows, red, red, green arrow going up. That indicates that yesterday was a close to the upside that's closing bullish into the week's sell-off. And what you often find is once you've got, well, let's look on the daily chart. Once you've got a bullish candle that digs into a series of bearish candles, so bearish candle one, bearish candle two, bearish candle three, you've got that correction. So the first day of corrections it would be expected to be followed by another day of upward corrections. So we're looking to buy low back into the highs of the day. So as you can see, we're coming down low, potentially to buy low in the support area to go up and stay in line with the correction that's in place. So that was a bullish scenario. But again, the video will be shared very, very shortly. I'm going to wrap up very, very soon. We're going to look at gold. Gold price. Right, so this gold price has been digging into the rally, drop, put it on the 3-day cycle template so you can get a good picture of what's been going on this week compared to last. So it's been a bit of a flat week, isn't it, really? We sort of continued lower on Monday from last week's bearish scenario. So 1, 2, 3, 4, 5, 6 days of shorts We've started to stall on the downside. So are we going to see a short squeeze today and tomorrow, perhaps? Yesterday was an inside day, so there are stops above to target. So impulse, correction, prospects for continuation. That would be my bias, considering how many days short we've been. Running out of sellers, maybe. But if we can get back below yesterday's low, then we could be looking for a downside continuation. Uh, we're certainly pummeling into yesterday's closing price with resistance coming into play here. So resistance, strong move to the downside, bit of a pullback, meeting highs that were made over here, resistance. So let's see if this continues lower, which would be in line with a bullish correction from support in the US dollar and yields. So we'll have to wait and see, won't we? These are the lows. That's the first target coming in towards at least. Pretty heavily at the moment. Strong sell-off. Perhaps it's got momentum to break, to target yesterday's lows, and let's resume supporting area. Right, so eyes on yesterday's supporting area on a break of this support. And then the question will be whether it's going to find support lower down for the move up. Perhaps the Wall Street Open. Over here. $9.30 New York. Dumping before the pump. The open, perhaps. So let's keep an eye on the support level, whether we break through it, and then this area down low, yesterday's lows. Mark it off as a figure if you like. So 18, 16, 18, 19-ish. Let's see, we're breaking 18, 19 as I speak. Are we going to get a close below it? We've got 4 minutes until the end of this 15-minute rotation. So let's see what happens. Dollar yen. So dollar yen following that large drop that may or may not have been in the Bank of Japan, probably is. Sort of consolidation, mid-range of last week's range. Came low into last week's low. We moved up from last week's low. So we've impulsed, we've corrected from yesterday's closing price. Come back in on the inside of today's rally. Are we going to see a continuation up to test stops above yesterday's inside day highs as potential resistance. Right, so we could be heading that way. Again, that will require dollar to find support or into the Wall Street Open. All right. So no, my mic is firmly on. I don't know why you can hear Indian. There's no Indian speakers here. Yeah, all eyes on the dollar. What data have we got in 5 minutes? Didn't know that we had anything particular. Okay, the jolt or whatever it is. What is it? Initial jobless. Yeah, 3 minutes. No, well, I mean, no thoughts as usual. Just basically waiting for the data to come out and then reacting to the price action on the release, giving it some time to settle, and then we'll be heading towards the Wall Street Open. Um, let's see what we get from the data. It's going to play into the bullish narrative in the dollar or not. We'll have to wait and see. All right, guys. So we're going to wrap it up there, and we shall see you in the chat room.